The market starts trying to make sense of Donald Trump. Amid President Trump's pile of day one executive orders, he didn't immediately impose tariffs, but he did later threaten up to 25% on both Canada and Mexico, and said that what duties are imposed on China might depend on whether Beijing sells a stake in TikTok. Russ Mould is investment director at AJ Bell. Russ, we've seen some relief from the market then that those tariffs didn't come in on day one.
Yes, we have. I think overall markets are trying to second guess what the new president's going to do, and they still don't know. They're still none the wiser. So we've got, since November the 5th, we've had the Trump bump in equities, which has started to run out of a little bit of steam. We've had the dollar go up, and we've had US Treasuries go down. So different investors have got different perspectives on what they think might be coming.
Trump now seems to want to use TikTok as a bargaining chip with China. What did the Asian markets make of that?
Yeah, they took it with a degree of calm, I think, because again, it's very much what deal does the president think he can craft and what does he get in return? And that's really been the lesson from his first term was, he threatened France and Mexico with some very punitive tariffs, got something in exchange, backed off, and everybody moved on. And I think that's sort of what equity markets are hoping we see this time around as well.
You mentioned Mexico there. Major manufacturers moved production there for the American market, of course, and Volkswagen already warned today that that's going to hit them. What impact could it have on international manufacturers?
I mean, it's a really difficult one because if you look at a lot of the Mexican trade flow that there is, this is equipment or major bits of machinery that are shipped backwards and forwards across the border several times during assembly. So if that tariff applies every single time, then that's going to be a really expensive piece of kit by the time that we finish. So companies may well feel obliged to move more production to the United States, and that's actually what President Trump wants.
Are car makers particularly at risk here, given, of course, he's also reversed Biden's electric vehicle targets that they've been working towards?
I mean, this is the intriguing thing with Tesla, is that its share price has greatly welcomed President Trump's election victory, but equally there are some threats there. The possible scrapping of a subsidy is one. Tesla has a big position in China and a big presence in China, which again could be a further complication. So it's not necessarily all win-win, even for the leading electric vehicle company out there in the US right now. Some of the car makers have a presence in the US already. I think Volkswagen does, so they'll, again, do their best to get round to it. But industries that you would be worried about are potentially cars, luxury goods, for example. And President Trump mentioned agriculture as being in the firing line as well.
As Volkswagen pointed out, European firms are rather stuck in the middle here. Which sectors should investors be most worried about?
Now, I think the one thing from a UK perspective, at least, is America runs a trade surplus with us, so we're probably not necessarily top of the hit list. But in terms of particular industries, as we say, cars and luxury goods are possible challenges. I guess luxury goods has got a bit of a lift recently in terms of the Richemont numbers, but those are the ones that would be the biggest risk. If you're looking for industries that are well protected, well, then just look at those that are companies, then ones that aren't particularly heavily selling into America. So the UK, a house builder would be a pretty good start, for example.
That was Russ Mould of AJ Bell. Don't forget, you can watch more videos on Reuters.com.